Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, November 25th, 2022. So, the week is almost in the books. We got about 15 minutes left in the trading week, and I don't really expect too much more to happen here. It is an abbreviated trading session. So I did want to show you guys just a couple of things going into next week. I had just finished doing the premium video for the good folks in the gold room, and I saw just a couple of things that I thought were rather interesting. So I thought I'd bring that to the good folks at the YouTube and show you guys what I'm looking at. So I'm going to start here with IWM. Keep in mind, I'm showing you IWM, but IWM I'm kind of just using as a proxy for the entire market, right? So you could use SPY, you could use QQQ. They're not as developed, they're weaker. So I'm using IWM because it's a little bit stronger and it kind of will work to show a point that I'm trying to make. So with the IWM here on the left, we have the weekly. On the right, we have the daily. And you can see here on the MACD, using 21, 34, 34 settings, you got a sell signal back there. You did go on to make a new high, but you see how you made the new high with the green below the blue, which is incorrect. And then from there, price falls apart in a rather major way. So the last signal that was active was a negative position on MACD, right? And this came back here near the highs. You now have the opposite signal, right? Now, does this signal here mean that this is just going to do this? Probably not, right? Probably not. But it is a major change, right? If you're going to have this signal acting as a weight on the market, then this signal should technically act as tailwinds. So that all looks pretty good. From a technical basis, it actually hasn't breached a technical level that it needs to breach. So the level that I'm looking at here is roughly from about 188 to about 190. And the reason I'm giving you 188 as the lower number is because that's your daily VWAP, right? 188.31 to be specific. It's your VWAP since the beginning of the year, and it has contained price, dotted white line, at least so far. And the reason I'm giving you 190 is because that's your 50 period on your weekly, which is where it found resistance before, right? So it's a really interesting spot here because you're starting to get early buy signals, but you're doing it against very major resistance levels. In this case, 188 to 190, right? Just basically right there. So everything looks good to continue higher, and I think it'll move a lot more easily once it does get above 190. If it gets above 190 here in IWM, I think you can go to about 120 or 200. Above 190, I think you can get to 200 on IWM. And that, of course, would take up the QQQ and the SPY, which are currently weaker. However, I do want to show you a couple things here that are, I don't want to say concerning, because concerning would imply that I have a feeling that this will break down. I would say that it limits the amount of meat that is on the bone, right? So you always have to think in terms of risk to reward. Let's say that we knew that from down here, we were going to try to go up to the daily 200, right? Like, let's just say we had a crystal ball. From this point to this point is a large distance, right? So it's worth making the trade. However, if from the point that we're at now, if we're unsure if it can get above here, and you see how close it is, basically this is like meat on the bone. There's not a ton of meat left on this bone, or there's not a ton of meat on the bone here to resistance. However, above resistance, there's actually a decent amount of meat from 190 back to 200, right? So that's just the main thing I want to stress to you going into next week. It's kind of like the most important signal that I'm seeing is the kind of the risk to reward at this exact moment in time. So most indexes will look like that. I think you can certainly use the IWM work that we just did as a proxy for everything else. Or if you choose to, you can even just use the SPY, although it's not as strong. So if we look at the VIX here, the VIX is now near its daily lower Bollinger. You can't see it on the chart. I don't have Bollingers on this chart, but it is right near its daily lower Bollinger, which is normally a place where the VIX likes to bounce. And it's also getting pretty close to this 20 level, right? 20 has also been a place where the VIX likes to bounce. So again, there's a strategy, and it actually has worked surprisingly well. it's kind of interesting how easy it is. You buy stocks, but the VIX is at 34.35. You buy stocks VIX 34.35 when nobody else wants to, and you sell stocks VIX 20, right? So if that is the case, are we closer to 20 or are we closer to 35 right now with a reading of 20.57? We're significantly closer to 20, right? We're less than a point away. So again, even though there's no signal here to get me to think otherwise, and in fact the weekly could actually keep going lower, certainly. The amount of meat that's left on the bone here is relatively thin. So it tells me one of two things. Either A, wait for a better pullback intraday, right? Maybe to an hourly 50 SMA on an hourly. I like those as entries. Or B, let the breakout happen above IWM 190. And then play it from 190 to 200. And when I say the IWM, that would count for anything. So for example, if IWM gets above 190, theoretically I could go out there and buy SPY, or I could buy you could buy pretty much any stock, right? Using that as just kind of the market proxy for everything. And then lastly here on the VVIX. So the VVIX, the whole thing has been, relatively thin amounts of meat left on the bone. Here on the VVIX, unlike the VIX, which is just drilling and drilling and drilling, the VVIX actually, you see how it's kind of has like this double bottom thing going on here? Now, again, this isn't anything, right? Like this could easily just go here and then fail 100%. But at least let's respect the fact that it's got some level of a base structure at a previous low, right? And if we can do that, then that tells me, one, that we need to be sizing a little bit smaller. Two, we likely need to be trading a little bit faster. And three, if we have longs that we've been carrying, for a week, 2 weeks, however long you may have be carrying any longs, maybe move your stops up on those, right? Tighten up your stops, and usually shrink the position size is the way to approach this. So just wanted to show you those couple things there. Just to tie it all together, though, because I do want it to come across the right way. The markets have made some considerable progress. If you just go back to the very beginning of this video, I showed you the dynamic there around the IWM MACD, which is correct for the first time in probably a year, which is a significant step forward. The other significant steps forward here are found in the dollar, right? So you see this buy signal that happened back in 2021, right? Here on the dollar, and that buy signal has triggered you to have this huge move up in the dollar, which keeps equities, stocks down, usually, right? It puts pressure on stocks and equities. You now have the opposite signal here on the dollar as well. So you have IWM with a positive cross, and you have dollar with a negative cross, right? Both of those equal bullish. But aside from my terrible trackpad handwriting, although it equals bullish, I do want you to exercise some level of caution just because of the proximity to the resistance zones, and the volatility products may need to breathe a little bit higher first, which would allow typically a better pullback entry for the larger signals, which are at this point aligned in a bullish fashion. All right, guys, that's my time. If you have any questions as to anything that we talked about, this is a little bit more of like a technical video. Like normally we'll come on and we'll tell you, go buy some ENPH or go buy some Google. But this is a little bit more of a technical video. I just kind of wanted to show you the thought process behind it. And really the main thing I wanted to stress to you guys in the YouTubes is just how to understand how much meat is left on the bone, right? Find your resistance levels and then look at other products as well, right? So notice we started with IWM, 188 to 190 was our resistance level. We isolated that, and then we moved over to the VIX products and we said, hey, those are relatively close to support levels. So we have the major index at resistance, we have the major volatility products at support. Is that alone, are those two things alone enough to create a short? Not yet. But it is enough to say, okay, this is still bullish, but the risk to reward might not be totally correct here. Let's adjust. Once we've either pulled back and held, then we can add again, or we can wait until the breakout and there is some playability from the breakout to the next resistance level, which is relatively far away. Alright guys, that is my time. So thanks as always for stopping in, checking us out on a Friday. We do appreciate it. Leave us a like, leave us a comment. It does help us with the algorithm. The almighty algorithm needs to be pleased. So we would certainly appreciate that. And aside from that, guys, hope you have a great weekend. And I'll catch you here for the next one on Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.